Hello everyone, I am CA Vibhuti Narang. Welcome to our channel VN Practical Destination. In today's video, I'll be discussing about a concept, the basic knowledge about the concept of TDS, that is tax deducted at source. TDS is a direct tax which is levied under the Income Tax Act 1961. Now when I'm saying it is a direct tax, it means there is something in the Indian taxation which we call it as indirect tax also. So before proceeding to the whole concept or basics about the tax deducted at source, we'll first understand the difference about direct and indirect tax. So the first thing is, what is direct and what is indirect tax in India? Whenever you pay as a taxpayer on the income earned by you, and you pay that tax on the income to the government, is a direct tax, means which is being directly paid by the taxpayer on his income. Indirect tax is not directly being paid by the taxpayer, it is paid by some third party, or you can say not directly by the customer. For example, if we go to purchase something in the market and any indirect tax is levied on it, so we are not paying that tax. On our behalf, the third party, from the person from whom we have purchased the goods, means the seller of the goods, is paying tax on our behalf. If I talk about examples, indirect tax, you have Income Tax Act and corporate tax. And if I talk about indirect tax example, the best example in today's time is GST, that is Goods and Services Tax. Now, first of all, we'll understand in the direct tax system how the income tax is collected by the Income Tax Department. Now, the Income Tax Department collects tax in the income tax form from four areas. The first area is the self-assessment tax, means when the taxpayer himself assess his tax and pay to the government. The second is advance tax, means you have to, in the current financial year, you assess the advance tax liability and the taxpayer pay that tax liability. Third is tax deducted at source, which we will be discussing in this video, and the fourth topic is tax collected at source. So these are the four areas from which the Income Tax Department collects tax under the direct tax system. Now, before understanding what is TDS, we need to understand why was there a need for making this concept of TDS. See what happens, India is a very large country in terms of population. So we have crores of people living in India, and there is a chances of tax evasion. It means there are many people who may or may not be filing the return of income. So in the name itself, it is said that the tax is being deducted when the source is generated. It means when you are making the payment, the government, the Income Tax Department has come up with a concept in which he will be deducting the tax at the time of generation of the income for that tax. Right. So just to curb the concept of tax evasion, tax deducted at source concept was being introduced by the government. Now we'll understand what is actually tax deducted at source. Let's suppose we as a person, or we as a service provider, has provided some service to a client. For example, in CA is providing service to a client. The client is the person for whom it is an expenditure, and we, the service providers, the CA, is the person who is providing the service. For the service provider, it is income. For the person who is receiving the service, it is an expense. So when he is making payment for the amount earned by the CA, at that time, that is at the time of making payment, the person who is liable to pay the payment will deduct TDS at the set percentage. Now what the set percentage? I have a separate video on the topic TDS sections and rates. We'll also discuss over there that in which section, on what nature of service, and at what percentage the TDS is to be deducted. As of now, when we are providing any service and when we are receiving any payment, at the time of receipt of the payment, the TDS is to be deducted. What is the concept of deductor and deductee? In the last case only, I said that we as a CA is providing service to a client. Now this client who is paying to the CA is the deductor, means he is liable to deduct the TDS. He is also known as payer, and the CA, the person who will be receiving the income, is the deductee, also known as pay. Now we have provided the service of rupees 10,000, and when we are receiving the payment, we have assumed that the rate of TDS was 10%, that is 10% of 10,000 is 1,000 rupees. So payment of 9,000 is being given and TDS of 1,000 has been deducted on the same. Now we need to understand what is the responsibilities of deductor and deductee. The deductor means the client is responsible for these 5 things. The first thing he is liable to do is he has to timely deduct the TDS. Then he have to make payment under Challan 281 to the government. This payment is on the monthly basis. Then he has to deposit the TDS. Now making payment is making payment to the deductee, and deposit TDS is depositing TDS under Challan 281 to the government. Then filing return. Filing of return is on a quarterly basis depending upon the return type, whether it can be 24Q or 26Q. So the return is to be filed on quarterly basis. And the last thing, he has to timely issue the TDS certificate to the deductee. The responsibilities of the deductee, if I talk about, there are 4 responsibilities he has to look into. First, he has to timely issue the bill, because after issuing of the bill only the TDS is to be deducted. Second is he has to collect payment, although after deducting payment, but he has to collect his payment. Third, he has to collect the TDS certificate. And the last thing, the TDS which is deducted, which is being also reflected under 26 AS, he has to adjust that TDS with his income tax liability. So the TDS which is calculated or which is shown under 26 AS is deducted under your income tax liability, and the net tax payable or refund, as the case may be, is available to the deductee. The next thing is, what is the difference between income tax and TDS? Both are the concept of income tax only, but there is a slight difference between the two. The income tax is actually calculated on your annual income, means for the whole year what you have earned, the tax is being calculated, whereas TDS is calculated on a periodical income or a particular income. So it is not based upon that the whole tax period. You will be noticing that how much is income earned. On every single payment or on every particular payment you have to deduct the TDS. Income tax, a person pays income on his total income, that is his annual income, and in TDS it is only a part contribution. So let's suppose if the total income is of 1 lakh rupees, it may be a case not on whole 1 lakh the TDS is deducted. It must be there that only a part income, only on 10,000, 20,000 or 50,000 rupees the TDS is being deducted. The income tax is directly paid by the taxpayer. So we as a taxpayer will be directly paying our income tax to the department, but TDS is paid by the deductor on the behalf of the deductee. So it is not being directly paid by the taxpayer. The next concept will be understanding, which is again a very important concept under the Income Tax Act, which makes the basics of these income tax, is the financial year and the assessment year. See, in India, the financial year begins from 1st of April and ends on 31st of March. But if you talk about countries outside India, the calendar year is being followed as financial year, that is starting from 1st of January and ending on 31st of December. But if I talk about in India, the financial year is from April to March. The income earned in a financial year is assessed in the next year. That is why the subsequent next year to a financial year is known as assessment year. But if I talk about the TDS, TDS is deducted on the current financial year. So the income tax, when you are, for example, right now it is 1st April 2020 and 31st March 2021 as the current financial year. Now in this financial year, for the TDS, we are following financial year 2021. But if we are filing the income tax return, we are following financial year 2019 to 2020. The next concept is when TDS is to be deducted. See, TDS is to be deducted in earlier of both of the cases. The first case is credit of such income to the account of pay, and the second case is at the time of payment. So whenever earlier of the two things will occur, at that time TDS is to be deducted. Credit of such income means when the deductor is passing the entry in its books of account, he will be passing an entry expense account debit to party and to TDS. So when this party is credited, at that time, if this time of point is earlier, then at this point of time you will be deducting TDS, or at the time of payment means party account debit to bank. So whatever the case is, whatever instance comes first, then you have to deduct the TDS, or you can say bill or payment, whichever is earlier. If the receipt of bill is earlier and you are passing the entry in the books of deductor at that time, or when the deductor is making payment, it can be before the arrival of bill also, advance payment can be made. So at that advance payment time you have to deduct the TDS. The next concept is when TDS is to be deposited. Now TDS is deposited on a monthly basis, that is every month the TDS is to be deposited, and the due date for this thing is 7th of the next month. For example, if it is April, it will be 7th May. If it is May, it will be 7th June. If it is June, it will be 7th July. But for the last month, which is March, the due date is not 7th April, it is 30th of April. That is the last date of April. The TDS is to be deposited for the month of March. The next thing we need to understand is who is liable to deduct TDS. See, there is an important amendment or important change coming under this area, which was applicable or which is applicable from financial year 2020-21. That is why I decided to make you learn the earlier thing also and the new changes which has come up with. Till financial year 2019-20, what used to happen was that, see, in TDS there are two things. One, TDS which is deducted on the salary on your slab rate basis. So that is the normal case. Whenever your taxable limit exceeds, your income exceeds your taxable limit, then TDS salary come into picture, and all other sections except section 192, which is on TDS salary, comes under TDS non-salary. So for all those sections, TDS was liable to be deducted by each and every company, by each and every partnership firm, and the third case was by individual if last year was liable to audit under section 44AB. What is 44AB is your tax audit section, and in the case of individuals, 44AB is read with section 44AD. 44AD says for presumptive taxation that if the gross turnover of an individual increase by or is more than rupees 2 crore, then the individual is liable for tax audit, or if he or she is showing income less than 8% or 6% of the turnover, then he is liable for tax audit. And in case of professionals, if the gross receipts was more than rupees 50 lakh, then also the tax audit was applicable. So if these criteria was set out earlier, then we were liable to deduct TDS. But if I talk about financial year 2021, what business have to deduct TDS? Under the TDS salary, it is same as it is. Your income crosses the taxable limit 2,50,000, then you are liable to deduct TDS. But if I talk about the non-salary sections, then company partnership is same. Only the change has come in the area of individual deduction. So individual will be liable to deduct TDS from this financial year onwards if the last year turnover in case of business was more than rupees 1 crore, that is 1 crore, and in case of professionals the gross receipts were more than 50 lakh rupees. The topic which I have covered in this video is available on my website vnpracticaldestination.com under course outline TDS, basics of TDS. So if you want to go through the conceptual part, you can refer the website for in detail knowledge on these topics. Besides this, I also teach online as well as offline for the practical training of these GST, TDS and income tax concepts. So if you want, you can go for the registration on the website also. That's all for today's video. If you really liked my video, then please press the black thumb below and subscribe to my channel for latest updates. Thank you very much.